Good evening and welcome. I have a feeling we will get more people coming in, but it is already a full crowd or pretty decent crowd. So thank you for coming out on a Tuesday evening. It shows the importance of this topic. By the way, I don't know how many people know this, but we are the third most impacted zip code in California as far as insurance cancellations go. And it was one of the reasons why I thought it would be good to have a in-person conversation versus Zoom or something. And I want to thank Deputy Commissioner Julia Juarez for coming up. She actually flew in from LA, just came straight from the airport for this. And this is important. I mean, she had somebody from her office go talk to the Board of Supervisors. We got the boss here. Somebody who worked for her went there. So just some few things. My name is Sanjay Khandelwal. I am the president of the Loma Prieta Community Foundation, and we put this thing together. We're a nonprofit. We are dedicated to doing good in the mountain and in the community. And I'd also like to thank a few guests. So Supervisor Koenig, who is from the 1st District in Santa Cruz, is on his way. He'll be here in 4 minutes, 3 minutes. He will be here shortly. We also have Christine Zanardi sitting here, who is representing Supervisor Simidian, who is Santa Clara County 5th District. So, and for our mountain community, I do want to say thank you to both Supervisor Koenig and Supervisor Simidian. They've been good partners. They've been helpful. Reached out to them quite a few times, and they've always been there for us. So people have issues, reach out to your supervisors, people. It matters. I'm going to hand it to you.
Okay, thank you very much. Hello, everyone. Thank you so very much for being here. I really appreciate you making the time and your interest in discussing this very important issue. We are at a crisis with insurance, and it is important for all of us to be involved, engaged, and get to solutions together. So thank you, first and foremost. Thank you very much for being here. And on behalf of Insurance Commissioner Ricardo Lara, it's my pleasure to be here with you too. My name is Julia Juarez. I am Deputy Commissioner for Community Relations and Outreach, and I am part of a team of about 14 people throughout the state that we go out and have these conversations. And it is very much so important since when Commissioner Lara first got to office, we only had about 3 people in this department. And so we did expanded so that we can go out there. And so this last year, we have held over 268 meetings in meetings like this, virtually throughout the state, because this is important, and it is not only affecting communities, in Northern California, it is affecting everyone in the state. And so, thank you for that. I would also like to thank Terry, is that right? Yes, Terry, for helping me today. He's going to be my clicker. So thank you, Terry. Everybody give Terry a hand. So, all right, let's get on with it, Terry. So if you can press the next one. So as we know, I don't need to go into detail about all of this. We know that insurance is a national, it's an international issue, because we are working with insurance companies who are conglomerates, who are very much so doing business all over the world. And so we have seen that the increased costs in everything from eggs up to building materials and things like that have absolutely exacerbated just the market in general. And so everything has just increased in price. So how many of you have seen a huge increase in your insurance? Yeah, that is very much so part of this, part of that whole issue. And so every time that we met with insurance companies from the very beginning, one of the biggest things that they have told us is like, we have way too much risk in California in particular, and we need to lower our risk in order for us to be able to to provide the services that people need. And so that is very much so one of the biggest things. And it's going to be something that you're going to hear about throughout. But basically all of these things, the increased costs, inflation all around, reinsurance, basically insurance for the insurance companies, is very volatile. And guess where all of these reinsurance companies are based out of? Bermuda, which really means nobody is really regulating them in any way, shape, or form. So their rates that they pass on to the insurance companies are very, very volatile and go up and down whichever way that they think. And so all of those things have become much more costlier, and that is why insurance companies are losing money throughout, but particularly here in California. Terry, let's go to the next slide. Here in California, what does that mean? That means that we have the top 12 companies that you have all heard of because of their commercials, because they're good neighbors, because they are, whatever it is. They are the top companies that have 85% of the entire insurance market. So California as a whole has, that is a major, major issue. So out of all of those companies, most of them, so 7 out of the top 12, have basically just paused selling insurance, homeowners insurance as a whole, and in some parts as well is also commercial insurance. So that is the biggest issue. Let's go to the next slide, Terry. This is what that means. If you look at this, the market share, State Farm, which everybody has heard of State Farm, and everybody has heard, and if you haven't, or if you weren't one of those people that have been dropped by State Farm because of non-renewals, you can see here why. State Farm has the biggest market share in the entire state. Then after that is Farmers. Then you see how it considerably lowers throughout from the other companies. Now the thing about it is, every insurance company practically every insurance company has requested increases in rates. However, the way that our system works, because of Prop 103, the system actually was set up so that if you ask for more than 7% increase, you would have to go into a hearing, or it would be really a big issue for interveners. So we have an intervener process here in California, which means it's nonprofit organizations or whatever consumer organizations will question the insurance companies as to why they want to raise rates. And so that kind of slows things down and goes through this whole process. So insurance companies, for the last 30 years or so, have always asked for 6.9% increases, right? So when they ask for 6.9% increases, we go through this whole process, but interveners would still get involved. And so the way that our system is set up, the interveners then can actually hold the process up to 18 months as they're going through the whole thing and questioning. Now, the thing about it is, in the past, the questioning could be the same questions that the Department of Insurance has asked. They can just say the same questions, or they can just, they would have that. Now, the way that the system worked, too, is that after this whole thing is over, and everybody agreed, insurance companies need this much, then the intervener will come back to the insurance company and say, all right, well, we had 3 lawyers, 5 actuaries working on this for 18 months, so you need to pay us for that. And so that's how interveners made their money, right? So it was a good business model for them, because that's, they can just kind of slow things down. The problem with that is that then insurance companies never really asked for the rates that they needed. And so we never really got incremental increases. And so when Commissioner Lara came on board, he noticed that insurance companies will get their 6.9% because it's like, okay, yeah, we see that you need 6.9%. Guess what happened the very next day? They applied for another 6.9%. So it just was an over and over and over, issue, and it just never really got taken care of. So now the insurance companies, if you see here, those increases are much higher that they're requesting. So then what does that translate to the consumer is that suddenly, rather than maybe paying $50 more every year, you're now being asked to dish out maybe thousands of dollars more every year. And so that's the reason that we're seeing these major increases. And in particular communities, which I am sure, just driving over here, I realized, this is definitely going to be a community where I'm going to hear a lot about people having a hard time with insurance. Because the other thing, the way that insurance companies work, is that when they get an increase, they get an increase for their entire book of business. So if they got 6.9%, that means that they will look at the entire state and decide, okay, well, I can increase my rates by 6.9%, but the folks over here in the urban areas that have no risk of wildfires or anything like that, they probably will get a decrease. But the folks that have homes that are in wildfire risk areas might not just get a 6.9 increase, but they might get a 100% increase, or 200, maybe 300% increases. And it is very much so because they just needed to find that balance within their entire books. And so that's what we have been working with them on. And that's why you will see from the get-go, I just wanted to make sure that you all are aware, this is the way that works. So Terry, let's go to the next slide. So in California context, and I am so sorry about those numbers that you can barely see in the black, but basically what we have seen is that insurance companies have seen their losses just skyrocket, and their profits also lowered. California is the biggest insurance market in the entire country, and we are only second to China in the entire world. So California is very much so a major player in insurance, and insurance companies want to do business here. They do not want to leave the state because it is very much so a place for them to do business and for them to do well. But here, since 2012, we are seeing that throughout the country, they have seen their loss ratio at 59%, California 73.9%. Underwriting profit throughout the country, 3.6%, in California, minus 13.1%. And direct profit on insurance transactions throughout the country, 4.2%, in California, minus 6.1%. And then the direct return on net worth throughout the country, 7%, and in California, 0.8%. So you can see what the major issue is. And this is basically just giving you a full overall picture of why is it that we're here. Let's go to the next one, Terry. So how do we get here? Who has heard of the FAIR Plan? Yes, many of us, most if not all of you. We have seen that the FAIR Plan has increased to about 3% of the market. When the FAIR Plan was created in the 60s, it was created after the Watts riots, and it was very much so just supposed to be a stopgap for people, something that they can buy until they were able to find insurance in the regular market. It was supposed to be only for a few months. You were supposed to only be a part of the FAIR Plan for a few months. And up until 2019, that was throughout the state, it was a pretty small number of people who were part of the FAIR Plan, because still, it was just a stopgap. People were only there for months, maybe a year, 2 at the absolute most, but normally that was it. After the fires in 2017, 2018, we have seen just a huge increase in the FAIR Plan. We have seen people applying for the FAIR Plan at 1,000 applications a day. So that has been huge increase. So even though 3% doesn't sound like very much, 3% of the entire market. It is exponentially high in some in particular communities. And rather than being the last resort, the insurance of last resort in some communities, such as yours, it is the only option. So we have a lot of work to do to try to make sure that people get out of the FAIR Plan. And what we have seen is that the insurance companies have actually been downgraded with because of their risk concentration. So you see, they have been downgraded to a B. Normally, that doesn't sound like B wasn't so bad when we were in school, right? But it turns out you have A+, A minus, and then B. Insurance companies have seen huge drops in their in their outlooks because of the risk concentration in California in particular. So that has been a major issue for them as well. So that is why they will not write in particular communities because it's too much risk for them. So along with that, our rate filings then have become much more complex. And like I told you before about our intervenor process, one entity can really stop everything at its tracks. And so these are the major issues that we need to tackle. So let's go to the next one. Who has heard of the Safer from Wildfires framework? A few people, right? Yeah. So basically what Commissioner Lara did when he was hearing from all of these different communities and the insurance companies and the firefighters and all of that, that people were trying to figure out how do I decrease decrease my risk? What can I do? How do I mitigate my home? So what Commissioner Lara did is he got all of the different agencies that deal with wildfire. So every single agency in the state that dealt with this, brought them together and said, we need to come up with very specific things that people can do so that they can lower the risk, so that it is something that then insurance companies can look at and can say, all right, well, if you lowered your risk, then we can give you insurance, or we can work with you. So that basically came into three different things: protecting your home, your particular home, protecting your immediate surroundings, and then protecting your entire community as a whole. So that is generally what the Safer from Wildfire framework is. And so what they did is they came up with very specific things that you can count on, that you can then do in your homes and in this areas. And insurance companies now, it's law that they must take all of those things into account when they write insurance for you. So let's go to the next slide. What does that mean? Protecting your home. Here are the 6 things, very specific things. And you can, you don't have to, I have all of this in our website, and you can see that, but very specific things here. Many of you probably have already done most of these things, or have been working with this. But it is, things that you can enumerate, right? It's like, I have done this, and this. So this is for your for your home. The next slide is your immediate surroundings. Also, very specific things that you can do for your immediate surroundings, right? Clearing vegetation, moving sheds, trimming trees, that kind of thing. Very specific things, again, like that you can see. And then the last one, let's go to the last one. The last one is your community. And that is basically if you are part of a fire-wise community, or your neighborhood can actually get together and figure out how to work together to decrease your risk. So do mitigation. So if you're part of a fire-wise community, the really good thing about that is that and it can be, and Terry, correct me if I'm wrong, because Terry is the leader of one of the fire-wise communities here, and it is if you have 8 neighbors altogether, or as many I don't remember how many more, but at least 8 people, 8 homes in the neighborhood that get together, they can decide to create a fire-wise community or a fire-safe community. And what's really great about that is that then this community, this group, can then apply for grants from the state so that you can then get help to mitigate that risk. So some people have applied for grants to get chipping programs or things like that, where you can go and get rid of your excess debris or anything like that. So those are the types of things that can happen with that. So all of this was created, and so many of you might say, I have done all of this. I have told my insurance company that I have done all of this. I'm still getting dropped, or I'm not getting anything. So what the commissioner did was told the insurance companies, people will go and will do this, and if they do all of these things, they deserve an incentive, so they should get a discount in their insurance. And so now it is part of the law for them that if you do these things, that you can do that. Now, along with that, what the commissioner did was, a lot of times you were hearing from insurance companies that were saying, we reviewed your wildfire risk score, and your wildfire risk score is very high, so we're going to have to drop you because of that. So then you would say, or we're going to have to increase your price very, very high. So then you as a consumer would say to them, well, tell me, how did you come about getting that wildfire risk score? Show me and tell me what I need to do. And insurance companies at that point would say, that is proprietary information, so we can't share it with you because you might tell our competitors or something crazy like that. And the thing about it was, up until 2019, too, even the Department of Insurance wasn't able to look at those numbers, wasn't able to look at those things at all. So people were very much so enraged because we were left out in the dark. So when Commissioner Lara put this together, then he said to the insurance companies, okay, so not only will you have to take care of this and pay attention to what people are doing and take into consideration what they are doing to mitigate the risk, but if you are telling consumers that you are using wildfire risk score as an issue, then you will have to show the consumer what their wildfire risk score is and what they need to do to fix that. And if they don't agree with you, because they have done all of this work, they can appeal their wildfire risk score. That has never been done. And because of that, then the department was able to really put this together, and now it is something that we can go back to insurance companies and ask for. Now, if you're in the FAIR Plan, you might be saying, well, I'm already in the FAIR Plan, they already dropped me, and this, so it's a moot issue. Thank you. I don't know who said that. But basically but right now, the FAIR Plan will give you 15% off for the things that you have done to decrease your costs. And they will also look at, if your wildfire risk score and work with you on that as well. Now, if you are trying to reach your broker or your agent to work with you with the FAIR Plan and you have not been able to get a hold of the FAIR Plan, remember the FAIR Plan, because the FAIR Plan, let me back up a little bit too about the FAIR Plan. The FAIR Plan is not a state program. The FAIR Plan, like I told you, was created by the legislature. Basically, you guys need to create this. However, the insurance companies run the FAIR Plan. They are in the board and they make the decisions as to what happens with a FAIR Plan. So it is an insurance program. Now, in order for the FAIR Plan to survive, they basically survive out of the payments that they get from consumers. But also, if there is a major catastrophe, then the FAIR Plan is then funded by all the insurance companies that do business in the state, according to their market share in the state. So all of them have to put money into the FAIR Plan. So they all have something to do with the FAIR Plan. So it is that is a major thing there. So you can get your discount from the FAIR Plan. If you cannot get a hold of the FAIR Plan or cannot talk to somebody directly because they're swamped with all these other things that they're doing, contact the Department of Insurance and we will work with you on that and work with the FAIR Plan directly. So at the end of this, I will give you an 800 number where you can reach one of our experts and they will be able to work with you on that. So let's go on to the next slide, Terry. So this is what I was talking to you about. So the FAIR Plan is now giving you discounts for that. The other thing is when, before 2019, because the FAIR Plan really was not utilized as much, the FAIR Plan only was able to provide insurance for people with homes that were worth less than $1.5 million. In California, that doesn't roll anymore. So the commissioner doubled that, at least to $3 million. For businesses, it was $3.5 million, and so the commissioner doubled that to $7 million. However, now that we are, this is a major, major issue, commercially, we have actually increased that to $20 million. So businesses are able to use that. In particular, HOAs, because HOAs were not able to find insurance because their needs were much, much higher. So at least the FAIR Plan will be able to provide for that. And I told you about the wildfire risk score. Let's go to the next slide. So now the commissioner realizes, as we're coming in and we're talking to all of you, and we're, everything that the department has been doing, and when we're meeting with people like you, is very much so. Everything is a place where we come in and we learn from you. We find out what are the major issues that you're having, and we work with the insurance companies and with our regulatory folks in our offices to try to find solutions. And so we heard from you that even though you were doing all of these things, you were doing your part to mitigate the risk. Insurance companies were still not writing insurance, and in some places were completely not just not writing, but they're dropping people. So we came up with, we worked together with the legislature, with the governor, to come up with the insurance, sustainable insurance strategy. And basically what that is we're working to make insurance accessible. First and foremost, insurance needs to be accessible. The thing about insurance is not like your utilities, that they have to provide utilities. Insurance companies can easily say, we don't want to sell insurance at all, and we don't have to. And we cannot, the commissioner or anybody, cannot make them do that. So how many of you recall the Northridge earthquake back in '94? It's a major earthquake, right? So when that happened, we had $40 billion in losses. Insurance companies really, got scared on that one, right? It's like, okay, this is really bad. So we're gonna stop doing business here because some of them were not able to provide what they were supposed to. So the legislature basically came back in and was like, okay, no, they have to sell insurance. And so they made all these rules for insurance companies that they had to come in and do this. Guess what insurance companies did? They all decided, nope, 95% of them stopped completely selling insurance in the state. So then we created the Earthquake Authority, the California Earthquake Authority. And so now we have to sell earthquake insurance as the state, and do all of this. Guess how many people actually buy earthquake insurance? About 3% of the people in California actually have earthquake insurance. And how many of us are in danger of an earthquake? 100% of us, right? And so that's the major issue. We do not want that to happen with fire. Because otherwise, then we're not going to have insurance for anyone. And then when losses come, they're going to be massive. So we do not want that. So what we're doing is working to make sure that insurance is accessible, working to create a resilient market so that, because what we have to do as a Department of Insurance and as Commissioner Lara, his job is to make sure that you're not being discriminated against, that your rates are reasonable, that you're able to pay for that, but then also for the insurance market to be able to survive, for them to be able to pay out when this happens, right? So we have to make sure that the market is resilient here in California. And then at the end of this, which is one of the most important things, we got to protect our communities from all the changes that are happening just throughout because of all of the different fires that we're having. Since Commissioner Lara came on board, we have seen fires, earthquakes, storms, floods, and we even had a tornado. So, or actually several tornadoes, which never have happened before. But all of those things, we need to make absolutely sure that we create the programs, the services, basically the industry needs to be moving forward. So how do we do this? Let's go to the next slide. So what Commissioner Lara came up with was very much so, you insurance companies, you must start writing in all communities, and we need at least 85% of our communities to be able to purchase insurance in the open market. So that is the very first thing. Insurance companies must write at least 85%, in particularly in areas that that we have are basically distressed, where we have the most amount of people on the FAIR Plan, that kind of thing. We need to return people from the FAIR Plan into the general market, and then the cap modeling, the way that we did business here in the state, or we have been doing business here in the state, is that insurance companies come to us and tell us, we want to increase the rates because this is how much we have seen. These are the losses we have seen within the last 10 years. And so then we decide, well, what is going to be your losses in the next 10 years by looking backwards to that? Well, we have seen some major losses within the last few years, and so we don't know exactly what that is going to look like, what is, and so historical values at this point really don't make sense to move forward. So what we're looking at is at a catastrophe model. So the catastrophe model basically allows insurance companies to then look at particular communities and particular homes specifically, so that they can say, okay, well, this home has done all this work to mitigate, and so then this should be how much they pay for their insurance. Whereas right now, they are basically just saying, this entire zip code, we're gonna get rid of, because the entire zip code is bad, right? So in this sense, what we're looking at is, through catastrophe modeling, is looking at, okay, let's look at particular communities, let's look at not just zip codes, but then individuals, so that we can see they have actually done the work. So then if they've done the work and they have been doing everything possible to make themselves safe, they should be able to not just get insurance, but they should get reasonable insurance. So that's what catastrophe modeling is. So we're working on that right now. Then the other thing is looking at reinsurance. I told you that reinsurance companies are up in Bermuda and doing their thing, right? The thing about it is that they then look at just catastrophes throughout the entire world, and so then shape how much they charge because of all of that, throughout. Now, we have been very lucky that in the last few years, a couple of years, we haven't had major losses in wildfires, and so we're doing better. We are mitigating. We are taking care of our homes and our communities, and we're doing better. So because of that, then we should also be able to then reap the benefits of that. So if we're going to allow insurance companies to say, well, we spend so much money on reinsurance, and we need to be able to count that as an expense when we do when we put our rates together. California was one of the only states in the country that didn't allow that, hasn't allowed that. And so at this point, what we're saying is, insurance companies, if you are going to come to us and say that you want to use this, what are you going to do to ensure that Californians only pay for reinsurance for the risk that California is having? Nobody else. Because if you're looking at risks that, even if they say only the United States, nope. You have seen all the losses that we have seen in Texas and in Florida and all that. We do not want to be lumped in with that. We want to be able to make sure that California losses are the only ones, or risk is the only thing that we are insuring. So that is where the reinsurance cost is. And then we're also working on modernizing the FAIR Plan. In 2019, not only was the FAIR Plan only doing $1.5 million, but they also did not accept anything but a check for the total amount of money that you owed at the beginning of your policy. That doesn't work anymore. That doesn't work anymore for many reasons, particularly because now people are being charged a lot more money than $1,200 or $2,400, and it is also, we have new systems now. We have, people can pay with a credit card, people can pay electronically, and in the past they weren't able to do that. So we have asked to do this. Now the difference, what is the FAIR Plan? The FAIR Plan will only provide insurance for wildfire risk. So even after you get the FAIR Plan, you still need to buy a difference in conditions policy. So that means that you have to purchase 2 insurance policies. So in order for you to do that, then you, of course, not only pay the fees for the FAIR Plan, but then you also pay the fees for another policy, right? So Commissioner Lara asked the FAIR Plan, you need to create just one policy, and people need to be able to buy this one full HO3 policy for the whole thing. Guess what the FAIR Plan did? The FAIR Plan sued the commissioner because they said, no, you do not have the authority to tell us what to do. And so this went on, and we, even though Commissioner Lara kept winning in court, the FAIR Plan continued to appeal, and just things like this happen all the time. And so finally, the FAIR Plan has agreed that they're going to provide a full HO3 policy. Now, this hasn't happened yet. They have just agreed to this, but it is something that that is going to be done. So we are modernizing the FAIR Plan. Next, we are also looking at, for some HOAs, $20 million for the entire HOA is not enough money still, that they need more insurance. So what we're doing is we're having the FAIR Plan actually upgrade so that it is $20 million per structure. So you're able to purchase then, let's say if you have an HOA that has several different structures where you have homes and then you have communal areas, so all of those, so the different structures will be able to get their own insurance so that you can have the insurance that you need. So those are the major things that we're doing. We're making sure that the coverage gaps are not there. Let's go to the next slide. So this is the largest reform that we are doing here in the state. And like I was telling you earlier, it is very much so informed by these meetings that we have with you, by talking to you individually, by getting this information to the people that crunch the numbers, and they are then able to see, what can we do. And so we are expecting that, these things are making a difference. And so I want you to know that if you are having an issue with your policies right now, we can go to our next slide, Terry. You can contact the department directly. This is a place where we have experts on the phone 9 a.m. to 5 p.m. Actually, it's 8 a.m. to 5 p.m. every day. And they will pick up the phone and talk to you directly. If you by chance happen to get a recording that says they will call you right back, our callback time is usually 1 minute. So we will make absolutely sure that we get in touch with you, and so then we will work with you with your particular your particular insurance company with your particular insurance issue. What we will do is we will walk through the insurance paperwork with you. How many of you, when you purchased your home and you got your insurance, they gave you about 40 pieces of paper to read? And how many of you read every single one of those? One person. Good job, sir. Good job, sir. I will tell you that I did not. I know that I did not. And I know that there are many of us that don't. And so there are many things that we don't know about what is in our insurance paperwork. And so that is the type of thing that, these people are there for. They can walk you through all of this. But then also, if you're having any issue, for instance, if you have done all your mitigation work and have come to the insurance company and have said, I want to see if I can get a discount or help me to make sure that I can, I can fix whatever issue you might have with my property so that I can continue getting insurance. What can I do? If you are having trouble contacting the insurance company or working with the insurance company, that is what our experts are there for. They will be able to walk you through it, and they'll be able to talk to the insurance company on your behalf. And so what we will do, what we also have is our website, which is very simple, insurance.ca.gov. And so what that over there, if you don't want to talk to anybody, which many people don't anymore, you can actually go in the chat and get your questions answered there. You can also do a request for assistance there. So and we have it there as a complaint. If you have a complaint against an insurance company or anything like that, you can fill that out and you can talk to people there. And they will work with you directly to figure out what how they can help you. But overall, I do want you to know that right now we are in the midst of the crisis. We are in the middle of the crisis. And you will hear from insurance companies like I showed you before. State Farm has 21% of the market. So you will hear State Farm basically getting rid of their risk as much as possible, right? And others also trying to get rid of their risk. But the thing that I want you to take away from this is that even though we're in the middle of this right now, there is movement in the market, and the market goes up and down, a lot. And so then there are times when there's crisis, but then it'll calm down. And so I do want you to know that these things are happening. So even though State Farm might be dropping people, we have over 111 companies in the state that sell homeowners insurance. If they have been allowed to sell insurance in the state, that means that they have gone through the entire process, they are vetted, and they are able to actually sell insurance in the state. So even though you might not know the name of the company, or you have never heard of the company that might be able to sell you insurance, at the end of the day, that those insurance companies are safe because they have been allowed to sell insurance in the state. Now, I told you that you're hearing of all of the different insurance companies dropping, but I bring to you good news in a way because we are also seeing insurance companies stepping up and saying, okay, how do we do make sure that we are there? So even though State Farm has dropped, right now we have in this last year we have AAA who has been doing business in the state for a while. They have actually been approved for their rates, and they have started opening up back up in Northern California and in Southern California. They're doing some work there. Allstate has actually come in and told the Department of Insurance while we are doing our workshops. By the way, all of this that I told you about, the catastrophe modeling and all of this, we are working on all of this right now. And the commissioner has given the Department of Insurance 1 year to get all of this done. So by the end of 2024, all of these things must be in place. So how many of you know that government works very slowly? It is a matter of fact, government works very, very slowly. But what's really exciting right now is that Governor Newsom understood we are in a crisis, and so he actually made it so that that this insurance issue, it is first and foremost the biggest thing that we tackle right now. And so that has made it so that not only the Department of Insurance is given the go-ahead to make all the changes that it needs and work with all of the different departments that it needs to work with, but then also the different departments that then ultimately approve the work that we do as well have been given a mandate that they have to take care of the Department of Insurance first. So, so what is happening right now is that we are hiring all of the different people that need to be crunching the numbers, getting all of that done. All of our actuaries and all of the different people that need to be working on this are being hired, are being trained, are taking care of all of this. And we are also then all the different offices of administrative law that reviews our new laws, they and approve all of that. They also have been given the green light that they need to just focus on this. And so by December 2024, all of this will be in place. If you are interested in being a part of the process and learning about this, getting involved, we want to hear from you. So we are doing workshops and where we are reviewing catastrophe modeling. We are talking to every expert in the field. We are we are learning and getting everybody together that is the experts in those fields. And we have actually been working with UC Santa Cruz very closely, not only with our catastrophe modeling, but also looking at the different types of insurance that we need to be looking at moving forward that can be helpful. So it is all of these different things together that are extremely important. So if you have any expertise in this, or if you want to be involved, you want to have your voice heard, we want to hear from you. So go into our website and sign up to receive our updates. We have consumer alerts that we send out. You will get a consumer alert at least twice a month that will give you an update of where we are and what we're doing at every step of the way, and how can you get involved as well. In the past, right now, even though you are doing your part and you are, cleaning up and mitigating, that is not being taken into consideration for insurance companies. We want to make absolutely sure that it does. And so the CAT modeling and all of, everything that we're working on is going to make absolutely sure that everything that we're doing is going to be taken into consideration as they're looking into their new insurance products as well, and as they're opening the market. So on that, I would like to thank you for having me. And I am happy to listen to you. And I am, like I said, the department not only is doing all of these things, not only because of what we have been learning from, talking with the experts, but also from hearing from you. So if you have a question, or if you have, I will do my best to answer the questions. And if it is something that is above my pay grade, I will take note of it, and I will try to find the answer for you. But please know that I am here to listen to you. I want to learn from you as well. And so thank you. Thank you for being here and for sharing with me.
Thank you. I'm Nancy Long. I'm a local resident for 48 years. Farmers dropped us in April. After I had all the certificate stuff done, I've called the Insurance Commission, and they keep sending me notes saying, thank you for your note, we're working on it. But it's okay, I found another company outside of California who gave me a better policy, so I'm good not going with the FAIR plan. But I was listening to the Consumer Watch Group and the former Insurance Commissioner John Garamendi, and they both said that Ricardo Lara, who is an elected official, does in fact have the power to make insurance companies do things. You were saying you can't make them, and you showed us the losses that homeowners' policies. What we don't understand is the profits that they're having from all of the other insurance they sell in California. And as you indicated, they want to do a lot of business in California. John Garamendi and the Consumer Watch Group say that Ricardo Lara can indeed tell insurance companies like Farmers, AAA, State Farm, blah, blah. If you don't sell homeowners insurance in our state, you can't sell any insurance in our state. And he can. Ricardo Lara does indeed have the power. John Garamendi is a former insurance commissioner. He said he does indeed have that power to do that. I would implore as somebody who lost my insurance, and for me, I don't have to pay $29,000 like the people up the hill are for their annual insurance. But for the people who can't afford that, we need an insurance commissioner to tell those companies, you can't sell anything here. They're making a lot of money on car insurance, life insurance, liability insurance, all of the other things there. So I would like to give that feedback. We need him to actually make a strong stand. Those are lovely things. They're not going to help the people who are canceled here today. But thank you for coming and talking to us.
Thank you. Thank you. I appreciate it. If I may just really quickly, on that point, if you heard me tell you about the point before about the earthquake insurance, that's the thing about it. Insurance companies are not just selling homeowners insurance or car insurance. They have 401k plans. They have many other types of things that they sell, not just in California but throughout the world. And so all of that is what you see at the end of the day when they have their profits. However, the reason it is actually in Prop 103 that we cannot tell insurance what they can and cannot sell. It is not. It's unfortunately, the thing about that is very much so, these are political things that, of course, political companies and organizations and businesses will try to have you look at this while not paying attention to what is happening here. And so ultimately, what I told you about interveners making all this money on the side, that's what Consumer Watchdog is. Consumer Watchdog was actually the organization that wrote Prop 103. That is the one organization that is making all of the money on all of the intervener processes that we have. And so all of those changes that we are coming up with, particularly, I didn't really go into details about what the changes are for the intervener processes, but the commissioner has been making changes on that as well to make it open to the public so that you can see and transparent. So now you can go into our website and you can look at how much money they have made and on what were the things that have actually been done, so that you can see that it is not something that is just done under, behind closed doors. Anyway, all of that, it's a lot more nuanced than that. So thank you for your question, and thank you all for the feedback. And it is something that we have been working on as well. So thank you.
Thank you, Julia. My name is Lynn Wubbles, and I'm a representative of a Firewise district on Trail Ridge Road, and we have about 10 mailboxes on our road. And we represent probably 150 acres of property, which is adjacent to the San Jose Water District lands. And those lands have high fire risk. However, we as a neighborhood have worked hard, and personally, my property is at the bottom of that group of properties. And I bought that property in '89, about 4 years after the big fire came up the canyon and burned everything out. So fire has always been something that's front and center for me. So the property that I have below my house is about 7 or 8 acres of cleared land. There are just a few trees down there. I mow that every year. That area represents a fire break to the properties up above us. San Jose Water District has grants from the state for fire mitigation on their property, and I met with them this morning, the people that are actually doing the trimming and the mitigation work. So they're going to spend about $14 million on 900 acres of land below us, and they will clear the lands next to the cleared area I have. They won't clear it, but they'll do fire suppression there. My point is this: I have a lot of water on my property too, in tanks and in ponds, and that water is accessible to the fire marshal. He has been out to my property and looked at the resources we have, and he's told me if we had another fire like they had in '85 that they would come out and stage men and equipment on our site. So my point is this: I think we do not fit the normal profile, my property or the other properties above, because I think we're in a pattern where we can seriously mitigate fire risk to probably more, not just my property, but to probably 10 properties around us. And I don't know how to put this together and get it in front of anybody that would care. I think I could get a letter from the water district as to what their mitigation memos are, what their mitigation measures are. I think the fire marshal would be willing to give me a letter. We could put together 4 or 5 pages of the work that's been done in the neighborhood. How do I put this together and present it so it doesn't just benefit me, but it benefits everyone else? And maybe that's a model for other communities up here in the mountains that maybe are doing some of the same things.
Thank you. Thank you. And that is fantastic information. And that is where we have our Firewise communities that are, like that you are a Firewise. And so that's where you can show that. And that's what we're looking at for the catastrophe modeling, be able to not only look at what you individually, what the community is doing, and then what you're surrounding, it's so that everybody is being taken into consideration. It is not just an overarching thing. So thank you so much for everything that you're doing there. That's fantastic work. Thank you.
Jeff Seltzer, Mountain resident. My compliments to the first questioner. She got most of my question out. And so State Farm, for instance, has excluded several zip codes because they're high risk. And as a result, they wind up continuing to collect premiums from the rest of the state of California, and their profit position is much improved by that. And it doesn't sound like they suffer any consequences for having done that. If there's no consequences, then isn't it just a no-brainer that a company would elect to just drop us to improve their P&L? What can you not do in the way of presenting consequences to companies? If they apply to you for rate increases, can you respond by saying, no, we're going to give you rate decreases for the rest of the state? Can that be done?
If it is, what we need to do when we review all of their numbers, we go through an actuarial process, and so we look at the entire book of business when they come to us for increases, and
But
so
I mean,
that is
linked,
so the entire thing.
contingent, so that it no longer makes sense for them, no longer makes business sense to simply drop us to improve their P&L. That there's a consequence, so they'll decide not to instead.
So if they decide, so that's the thing. So right now, they're just dropping, right? They're trying to do that. So if they want to continue doing business with the state, with our system that we're coming up with, it's very much so. You must write. That was my very first point. That you must write 85% of the state, and particularly areas that are wildfire risk.
That's in the works.
That is in the works. They must write at least 85% in those particular areas.
One more small question on it. In your opinion, about how far off are we, percentage-wise, on the premiums we're paying in the high-risk areas? How much more reasonably would we pay for a company like State Farm to instead say, okay, it's not so bad, do we have to drop all these policies? Are we off 5%, 10%, 50%?
So remember how I said that some of these things are above my pay grade?
Yeah.
Yeah. So unfortunately, those are things that I don't really know exact numbers. What I do know, though, is that State Farm has already, is one of the companies that have said that they are opening back up in the state, that they're going to be doing that. When we were doing our workshop in catastrophe modeling, Allstate also came in and said publicly that they, once that this is done, that they will open and start doing business throughout the entire state. If any of you have been with Tokyo Marine and have been dropped from insurance too, they dropped about 30,000 policies. Immediately after that happened, we also got a call from Mercury Insurance, and they said, we will work with everybody that was dropped, and we will work to make sure that they are covered and that we give them a policy that is appropriate to the exact same types of things that they needed before. So even though maybe State Farm might not, or Farmers might not be the company that provides the insurance, other insurance companies are stepping up to the plate, and that is the expectation with the sustainable insurance strategy, that they will all eventually, in order to continue doing business in the state and continue to be able to use catastrophe modeling for their rates, they're going to have to provide this insurance.
And
I have an answer to your question.
Can I have the next person go? Right.
If you haven't seen it.
Right. Go next.
Two quick comments. One question, but in a real estate market, mortgages, there is something called redlining that you're not allowed. It's illegal to do redlining. I almost feel like there should be something like that in insurance. You want to do business in California, you cannot redline a district and say, I'm not going to do business here. Anyway, it was just my thought that we can just say that one day and they have to do business. The second question is much more fundamental for my sanity. We got informed by State Farm that they're not going to renew us come January. And she said, we look at fair plan. So my question is regarding fair plan. Number one, does everybody qualify? That means I will get insurance from fair plan. And number two, how high can the premiums be? I heard somebody say $50,000 for a insurance, and I think then it becomes almost, untenable.
Absolutely.
So those are the two questions.
Okay. So the FAIR Plan was created as, like I said, the stopgap, right? So that means that everyone can get insurance from the FAIR Plan. If the FAIR Plan, there are very specific things why the FAIR Plan wouldn't insure you. And one is that your home is uninsurable. For instance, that it is completely falling apart and there is nothing that you can do there. Or that your property is valued at so much more higher than the FAIR Plan has availability. So that might be the only thing. Now, you can also go and find insurance out in the non-admitted market. And what that is that basically you can go and, like somebody said, they get insurance from a out-of-state company. And, some like Lloyd's of London, come to mind, right? It's like those types of companies are the ones that provide that, and you could get insurance through there. And for the most part, they're okay. The one thing about those insurance companies is that they are not guaranteed. So if something happens and they go out of business, then the state doesn't guarantee that you're going to be made whole in that sense. That's the only thing. But insurance companies are available that can do that. Now, how high can the FAIR Plan get? I really couldn't tell you. Sorry about that, because it depends on your property and it depends on what it is. But if you know right now that you must find insurance, I suggest that you look everywhere that you can. And if you find insurance that is almost the way that you had the plan before, I suggest that you go and get it as soon as possible before you run out of time. Because right now, this is, insurance companies might have something available today and might completely shut down the new market tomorrow. So if you find something, get it. Now, in regards to other tips, there's one particular tip that I like to give you. If you are looking for insurance, you can't find insurance in your local market, you can't find insurance, and the only thing available is the FAIR Plan. But you can go and look at the non-admitted market. I suggest that you not only contact maybe a broker here in the area, but maybe contact brokers in Southern California, somewhere else, maybe San Diego, maybe Los Angeles, in different places, because what you're going to find are insurance companies that might not have the number of people here, the concentration of policies here. And so they might say, well, most of my policies are in Los Angeles. I can handle the risk over there. And so then they might be able to give you insurance there. So those are some tips. And there's a top 10 tips in our website that you can look into that as well, that can give you some other ideas.
Ellen Kula here. I have we're going to be non-renewed by State Farm in September. And I have already reached out to various brokers and stuff. And basically everybody's telling me you need to be in the FAIR plan. I will have to be substantially co-insured myself in the FAIR plan because the limit is $3 million. So what can you suggest for that?
Yeah. So like I said, there are non-admitted brokers that you can go to. And so in that market, and so try to find other brokers that may be able to do it, maybe not here locally, like I said, maybe someplace different, so that you can find something that can be available there.
Michael Reitzma, living in the Summit West area, and I think my first question probably applies to most of us here. We still have a mortgage on our property, and our mortgage lender will compel us to have insurance. And so we know that the insurance that we have right now will be expiring within a given period of time. And one question foremost on my mind is, how long, assuming that we have to go with FAIR, how long will it take approximately to get on board with that plan? And then the second question I have is, I've been told that if you don't have appropriate level of insurance as required to support your mortgage, that the lender will go out and buy insurance for you. How does that weigh as an option against the FAIR plan?
Okay, so when you apply for the FAIR plan, right now, we have heard that it may take up to 6 weeks for you to get accepted and all that. So I urge you that if you have received a non-renewal notice, please look for insurance immediately. Go find insurance someplace else immediately. If the FAIR plan is your last option and your only option, I would try to start doing the work now to try to find out how much they will charge and all of this kind of stuff, like immediately. So get a broker to help you with that as well. But the idea of a bank giving you insurance, the bank is not selling you insurance. The bank is making sure that their investment is safe. So the bank is getting themselves insurance. So when they're saying, okay, if you can't find insurance, we'll take care of it for you, they're taking care of their investment. So if anything happens, they're going to be covered, but you won't be. So that would be the last thing that I would do, because one, it's going to be very expensive, and two, you're not going to be covered. So it's really not. If I were you, I wouldn't trust it. I wouldn't go there. Also, want to suggest there is an organization that helps as well, and it's called United Policyholders. If you have heard of them, but United Policyholders has a really great program where they can give you information about how to, what types of things you can do, and gives you really great advice there as well. So if you can't find anything, that would be a place to go.
The only thing I'll say is that I'm trying to get them up here in June, so hopefully we'll get United Policyholders, a couple of them, to come up and give us some real answers of what we can do. So.
I'm William Bjorgi. I live up on Mount Pache Road. And a few years ago, I was dropped by AAA and couldn't find anyone, so I got on the FAIR plan. And it worked out okay. Then just maybe 6 months ago, my neighbor said, hey, you can get on State Farm now. So I got on State Farm. But now I'm hearing State Farm's dropping us all, coming up. But I haven't received any kind of letter yet and that kind of stuff. But I guess my question is, moving forward, how do we envision that the insurance companies will verify that we've mitigated risk, like satellite photos or Firewise, or how?
Yeah. So, thank you for your question. Really appreciate it. The catastrophe modeling, it is basically that it is satellite photos and going into the different processes that we're looking at right now are all very very detailed, sciencey, techie. So I really can't tell you exactly what that's going to look like ultimately, but I know that it is going to be that insurance companies will be able to look at your property. In the past, and we have even heard from time to time from people who have said, the insurance company dropped me because they sent me a photo of my property, and it's a photo that was taken 12 years ago that was on Google. And it's like, well, yeah, that's not what the property looks like anymore, right? So even though, you go back and you fight that, in the past it just hasn't been, a possibility. Now we're looking at, when we do catastrophe modeling, then we will be able to look very specifically at what the property looks like and what your neighbors are doing and what your community as a whole is doing to ensure that you're being safe. So now, yes. So, and actually, those are the types of things that we have seen. I was in Napa a few months ago, and a couple told me, as we were having this conversation, they got up and they said, we did all of this, and we called the insurance company, and the insurance company came in. They actually brought somebody. They looked at everything, and we got a $1,200 rebate for our insurance. So it is working, and it does work. It just takes, it takes time for everything to happen and take place. So that's why. Thank you.
Hi there. Manu Koenig. I'm the county supervisor for this district. I wanted to start by thanking you, Deputy Commissioner Jimenez, for coming out and for Commissioner Lara's office's general approach of leaning into public engagement during this critical time, literally crisis. One question that has occurred to me watching this presentation now a couple of times, and thank you for coming in to present to the Board of Supervisors, is, you mentioned that cities and counties can become fire risk reduction communities. Obviously the county wants to do everything we can to support residents, and ultimately anything that we could do to reduce residents' premiums. Is that already, is there a checklist that's baked into the FAIR plan that would help residents get some kind of reduction? Because I'd love to figure out how many things we've done and what more could be still done.
Thank you. Thank you for your question. And thank you for being here also. Really appreciate it. And I know that what we have seen is that counties, when they have done this, they will put together, and different groups, actually, different cities, what they have done is they have put together a list of all of the things that they have done, and they will send that to all of their constituents and say, when you are talking to your insurance companies, these are the things that we have done as a community that you can share with the insurance company that add to your argument on what you're doing for mitigation. And so that in itself is a lot of help, because then it lists everything already for them. And then you, as the homeowner, can come to them and then not only is this my community, what my community has done, this is what I am doing, and this is what my Firewise community is doing. We have everything in place. So in the FAIR plan right now, you can at least get a 15% discount for all of that.
Got it. Right. Yeah, and I really appreciate the fact that you sort of, to whatever extent possible, are making sure that the FAIR plan represents that thinking. So then, assuming the county does a number of things, that would help people get a 15% discount. It wouldn't be additive like another 5%. Not another,
Yeah, right. But it will be part of that. But the FAIR plan is actually really working to incorporate all of these things into their policies. So the more you do, the more that you can actually see if you can get more discounts. And I would try everything because you never know. We have seen really wonderful things happen with some people who have tried to do more.
Is there any county that we should look to as a model that is really ticking all the boxes and that it's like?
So. You know what? I'm going to follow up with you on that in particular because I am actually having a meeting with Orinda tomorrow, and they have been one of those communities that have taken Firewise and all of that to the utmost and have done a lot of work. But we are also seeing some people being dropped there as well. So. The system is not perfect yet. We are still working on incorporating a lot of these things. But I know that's I'm going to have more information tomorrow. But then I'm also going to look at I'm going to talk to other folks within the department and see what I can share with you.
Great. Well, I look forward to continuing the conversation. Thanks again for coming out, and thank you, Sanjay, and all for putting this together.
Thank you. Anyone else have a burning question? If not, I'm going to ask one. Okay, one is, so you keep saying, or I've heard this enough times about there's lots of things in the works. By December, we will see some changes. What are the actual chances of insurance companies coming back and giving us wildfire insurance? Or should we all just go, it's the FAIR plan for the next 5 years?
Thank you for your question, and thank you for having me. I hope that I have answered all your questions. I know, I got to tell you that the department before Commissioner Lara came, and he asked, he said, okay, we need to do community meetings and we need to send people out. The department in itself just kicked and screamed on that, and very much so was just like, we don't want to go out there because we don't have any good news. We do not want to have anybody, and so they did not want to put the department out there. Commissioner Lara disagreed and was very much so, no, it is important for us to have these conversations. It is important for you to know, and it is important for you to be heard. And so, on that, thank you again for being here and for telling me your, the issues that you're having. Now, in regards to, yes, we are working on all of these things, and all of these things are happening right now. We are already seeing insurance companies opening back up. It is going to take some time in particular communities because the wildfire risk is much higher, and so that is, it's expected then to take some time for that. However, the movement is happening. We are seeing insurance companies starting to open up again, and so the expectation is, yes, the department will be done with what we have to do in order to make this happen by the end of 2024. Insurance companies have to respond at that point. So at that point, then we will see how much, how much insurance companies are going to start coming back. Now, this entire time, you have heard me talk about availability of insurance, getting insurance companies to come. You have not heard me talk about affordability just yet, because what we need to make sure of is that insurance companies are doing business in the state. If insurance companies are doing business in the state, then the next process is making sure that then insurance companies are then going to be asking for your business, because if they're going to have to provide 85% of the market for the entire state in order for them to be able to sell in the state, then they're going to be looking for which ones are those homes that have the least amount of risk that I can take and start selling insurance to. And so that's what they're supposed to, that's what they're going to be doing. So if you have done your part and you have mitigated your home and, doing that, then the expectation is that you're going to be one of those homes that they will be fighting for. But up until we get to that point where insurance companies are going to be able to then come back and start doing that, it's going to take some time. So, we're expected to be done in a year. Insurance companies then have to respond.
All right, so we go for fair plan for the next 5 years.
For the next, I wouldn't say 5 years. I wouldn't necessarily say 5 years, but at the same time, we are, and I need you to all to understand, we are actually tackling an issue that has been swept under the rug for the last 30 years. That no insurance commissioner has tried to touch it. When the commissioner brought the issue to the legislature this last year and said, these are the things that we need to do, this is how we're going to do it, you guys need to get on board and we need to move forward, the legislature did not do it because the legislature did not want to have rate increases in any way, shape, or form. They don't want to touch it with a 10-foot pole. So Commissioner Lara was very much so aware, this might be, political, suicide for me, but you know what? It's enough. People, we have pushed this on the side enough. This needs to be taken care of. This is the best way that we can take care of it. And all the insurance agencies in the country are looking to us because we are the biggest, and every single insurance agency in the country is going through the same thing. So one thing or the other, it's an issue throughout the entire country. And so they're trying to find what will work. And so this, so like when I said, the work that we're doing is something that we are trying to work on, not just getting informed by your responses, but by all of the experts and by talking to people all over the world. The commissioner has held meetings and summits with 12 different countries, bringing everybody together to find out what is happening in different areas and what have they done that can actually work. This is what we're looking at, and so it is. It's much bigger than just us. So anyway, I just want to make sure that you're aware we are working on it. It is not something that is taken care of immediately. It's still going to be an issue for a while, but it is starting to turn in the right direction.
Thank you.
Thank you.
And thank you all for coming.